The opinions and suggestions expressed on the following program are solely those of the participants and are not necessarily endorsed by KRMG, Cox Media Group Incorporated, or the program sponsors. This following program is sponsored by Causeway LLC. Information in this broadcast is not intended as an investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Causeway LLC, and Cox Media Group Tulsa are not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Causeway LLC, and Cox Media Group Tulsa makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk. Gather knowledge in the world of cryptocurrency right now on 102.3 KRMG, Tulsa's news and talk. Welcome to Cryptocurrency with Matthew J. Moore. Matthew is locally based right here in Tulsa. Questions, comments, concerns? Call 918-460-5764 or send us an open mic using the KRMG app. Now, here's Cryptocurrency with Matthew J. Moore.
And good Sunday evening to you. My name is Russell Mills. Thank you so much for tuning in to the Cryptocurrency Show tonight. And boy, do we have a lot to talk about this week. I mean, if you follow this space at all, you know that it has been a crazy, crazy week. And you know what? I'm just going to let the people who know what they're talking about start talking about it. And we'll kick it off with this guy. He is the namesake, the founder of the show, and the head cook of this very busy kitchen, Mr. Matthew J. Moore. Hey, Matt.
That's right, Russell. This kitchen is getting super hot right now, and if you're in this space, well, hopefully you're not cooking. I will tell you, it has been one wild week. It's probably one of the most pivotal weeks in the world of cryptocurrency, probably one of the quote-unquote Lehman moments of crypto, but we're definitely not discouraged. I mean, heck, we're here to bring you the facts. We're here to bring you to some news. There's definitely blood in the water, but this is all due to another centralized exchange blowing up. This time, it was the second largest cryptocurrency exchange in the world, known as FTX, and this, by far, like I was saying, is one of the biggest stories to ever hit cryptocurrency. The overnight success, literally, they have been an overnight success in a matter of years. The FTX exchange filed for bankruptcy and announced the resignation of its CEO, Sam Bankman-Fried, on Friday. So FTX.com, FTX U.S. operations, and Sam Bankman-Fried's cryptocurrency trading firm Alameda Research are among the 130 FTX Group companies covered by this bankruptcy filing. No doubt, it's a stunning downfall for the 30-year-old billionaire. Well, I guess he's not a billionaire anymore. Sam's empire went from $32 billion to $1 billion in a matter of days. Sam said he had misjudged FTX liquidity and users' margin prior to the crisis. What is unique, though, is that FTX had scrambled to secure a bailout before this all kind of really fell apart. And rival platform and the world's largest exchange, Binance, initially agreed to buy FTX. Only to back out to the non-binding deal due to concerns about the company's shady books and finances. However, all of this doesn't surprise me because the market liquidity, as we all know, was already drying up, and the cracks in some of these operations have been showing. And in fact, many of these failing exchanges in the past year have had some kind of exposure to the same contagion events. And since this is such a heavy story, it's still unfolding. I had to change my notes regularly. I thought it would be appropriate to bring back the panel that was with us last week. Good friends. They're awesome Bitcoiners. And they kind of preach the same message as I do, but it's, without a doubt, it's Charlie Spears. He is the founder of Nakamoto Partners. He's a Bitcoin miner. And then Andrew Ryan. He is a chartered financial analyst. Charlie, I don't mean to put you on the spot here, but somehow you got connected with Sam Bankman-Fried on LinkedIn, and you just recently sent him a message this week. Did you get a response?
No, he didn't reply. I'm not surprised, but yeah.
Kind of busy.
Yeah, I used to think, I've used my friend on LinkedIn. Now I'm like, oh no, he's my friend on LinkedIn. So yeah.
What about you, Andrew? How's this week been for you?
It's been super busy. I've been on Twitter a lot, just trying to wrap my mind around the fast-moving events.
I know. Well, the first comments that I want from both of you, and I basically already know what your answer is going to be because we literally pound this message home often on this show. But for those who don't know, in order to not get caught up in these failures and bankruptcies, what should one be doing with their Bitcoin?
Yep, it's the same message we always preach. There's a lot of cool things you can do in this space, but ultimately you should be dollar cost averaging and putting that in self-custody Holding your own keys.
And I would add to that in Bitcoin and Bitcoin only. Bitcoin just has the security is never been beat, and as long as you take it off an exchange, you take a lot of risks off the table. So.
Well, let's do this. Let's get some background story for the audience here who's totally unfamiliar. Maybe some of you are familiar with it, but there might be a lot of you out there that are completely, just don't know what's going on with this. And I just want to give some background. So in 2017, a 25-year-old American named Sam Bankman-Fried founded Alameda Research, a Hong Kong trading firm. Then in 2019, Sam Bankman-Fried founded the FTX exchange in the Bahamas. In 2021, Sam owned 90% of Alameda, which eventually became the trading arm for FTX, right? And even though these are two separate businesses, the division breaks down on Alameda's balance sheet. And according to a private financial document reviewed by CoinDesk, the balance sheet is full of FTX, which is specifically the FTT token issued by the exchange. It shows that Sam's trading giant, Alameda, rested on a foundation largely made up of a coin that a sister company invented and not an independent asset like a, let's say, government currency or another cryptocurrency like Bitcoin. The situation adds to evidence that these ties between FTX and Alameda are unusually close. So with billions and billions now up in smoke, the CEO of the investment platform Swan, which some of you might be familiar with, had a statement that they issued. They said, it's fascinating to see that the majority of the net equity in the Alameda business is actually FTX's own centrally controlled and printed out of thin air tokens. So in addition, here's what we also found out, and I found this interesting. So Sam had a back door into FTX books and took $10 billion of customers' funds from FTX and sent it to his trading company, Alameda, with about $1 to $2 billion of that currently unaccounted for. Andrew and Charlie, I think this is absolutely huge. Do you guys have any thoughts on this?
Every single hour of every single day this week, it just gets worse.
I know, it really does.
Yeah.
Well, and so there's two entities. You had Alameda, which was basically a hedge fund, and we don't care about it. If it goes belly up, who cares? The fraudulent part was it looks like Sam was using user funds to lend to his trading arm, and they went belly up.
They were leverage trading.
Yeah.
Yeah.
And so that's the real problem, and that's what could make this possibly criminal.
Yeah, and you will talk about this, but this was very conspicuous how it went down. This was a very trusted exchange, and they were Sam and the greater SBF Alameda FTX group was very advocating. They were advocating a lot in D.C., and they were kind of embraced by the SEC in a very conspicuous way. So it just does not look good. And a lot of us are trying to say, look, there is this thing called cryptocurrency, blockchain, specifically Bitcoin. These protocols work. What is going wrong here is the human action
of these centralized entities. Right. Well, with such a massive operation and money at play, how much of this do you think was due to incompetence or maybe malice? I mean, have you guys seen pictures of these kids? I mean, literally, these kids are running these multi-billion-dollar operations, and Sam did graduate from MIT. I'll give him that. But according to Fortune.com, the whole operation was ran by a gang of kids with very little real-life experience or business experience, let alone experience with exchanges and money management. They all moved to the Bahamas, and many either dated each other or met at MIT. So Caroline Ellison is a perfect example. She's a 20-something-year-old who dated Sam and was made the CEO of the multi-billion-dollar trading firm Alameda. So as book smart as these kids might be, it seems highly unlikely that maybe they could have ran this with much success. But how do a bunch of kids establish an exchange in 2019 and in a handful of years become one of the biggest players in the space, and they're getting arenas named after FTX? I mean, if you listen to Sam in his comments, it seems he didn't really understand what was going on with the operation at large, despite being the CEO. I mean, if you guys look at his tweets and his comments, do you concur with that? I mean, was he aware, or do you think he's just putting up a front?
I think he's highly aware.
Okay.
So he's extremely competent. He's never been aligned with Bitcoin. We've known this since day one, but we thought perhaps he was a builder. And the thing is, he was building something which is extremely fraudulent.
And he went to MIT. Yeah, he's smart. He knows what he's doing, and he knew that using customer funds to play with, to gamble with was wrong. So.
I think the bigger thing is why did everyone else think that he was the real deal? I mean, why does the SEC talk to him that closely? So that's, to me, like, okay, they should be out there protecting us from this person.
Right. Well, we'll talk about that more when we come back.
And the real question is this an existential crisis for Bitcoin, for cryptocurrencies writ large? I mean, questions pending, needs to be asked, and we've got a great panel here who's going to take a shot at answering it for us. Stick around. You're listening to Cryptocurrency with Matthew J. Moore on 102.3 KRMG, Tulsa's News and Talk. Welcome back to Cryptocurrency with Matthew J. Moore on 102.3 KRMG, Tulsa's News and Talk. My name is Russell Mills. Thank you very much for joining us. We are live and local, one of the only radio programs in the world dedicated 100% to talking about cryptocurrency. And boy, do we have a lot to talk about this week with the, absolute collapse of the world's second largest crypto exchange, FTX. Here to bring us more information and a little bit of insight into all that, our host, Matthew J. Moore. Hey, Matt.
Hey, Russell, that's right. Yeah, we got so much content, and this story is evolving regularly that we may end up making multiple episodes on this. So we're going to try to get through a lot, so I'm going to kind of speed it up here. But if you're listening to this show, hang on, buckle up, because this is the story of a lifetime for those who are in cryptocurrency. And if you miss an episode, hey, by the way, you can always check us out on Spotify and Apple Podcasts, Google Podcasts, krmg.com. We're all over the place. And today in studio to discuss this FTX fiasco are my favorites, known as Chartered Financial Analyst Andrew Ryan and Bitcoin miner and founder of Nakamoto Partners, Charlie Spears. Boys, round one was juicy. You ready to squeeze some more juice out of this evolving story?
You bet, Matt.
Keep going, yeah.
Let's do it. Well, however, I will say before we continue, I'm going to go ahead and give our sponsor a mention. They help us stay on the air with this great content. Hopefully you're being informed by it. This segment is made possible by a company called Hedge. Do you have a strategy to obtain cryptocurrency on a regular basis? Do you plan to automate your dollar cost averaging? What about getting all or maybe part of your paycheck into Bitcoin? Well, Hedge is revolutionizing how you get paid. Hedge makes it easy to automatically convert your pay into crypto. Whether you're an employer or employee, you can get started in 4 easy steps. So start getting paid in Bitcoin, Ethereum, or Litecoin. Bitcoin is a long-term play. Start your strategy today. Hedge is here to make it easy to stack those sats month after month. What are you waiting for? Start living on the hedge. You can check them out at gethedge.io. Again, that is gethedge.io. And we are also giving away, the show is, I would say, giving away $200 worth of Bitcoin. And in order to qualify, you just got to sign up and start using Hedge. And I will draw a lucky winner. So go to my website, mattjmoore.com. Scroll down to that resource section and you'll see a button that says Get Hedge. You can click that. You can sign up, start using Hedge, and maybe you'll be the winner of that $200 of Bitcoin. So we hope you do. But I'm going to go ahead and get this back on the road and get this information, this show going, because it's like we were saying, it's a lot that we have to unpack. So Andrew, Charlie, here is the start of round two. One thing that we know about this situation with FTX, the exchange, is that it's not directly related to things like Bitcoin and Bitcoin's network. So sure, market prices have tanked, but if you have your Bitcoin in cold storage, which we've harped on continually, you have the private keys, your Bitcoin is fine. The network is fine. The value proposition and security of Bitcoin is fine, and it's still the same. So this is just a natural process of centralized third parties blowing up due to mismanagement, malice, or incompetence, whatever you want to think of it. Markets have a way of weeding out bad actors, and this is just a continuation of that. It's a natural process, in my opinion. Capital will flow where it is often treated best. So I feel in the long term, this might be good for the space, despite the short term, consumer perception of Bitcoin. What are your thoughts?
Well, I think FTX is creating a lot of new Bitcoiners this week. Right. And I want to talk about real quick, when you keep your Bitcoin on an exchange, you have 3 major risks. The exchange could get hacked from the outside, so someone could steal from the outside. The owners could steal it, as we saw this week, and the government could confiscate it through such an executive order. If tomorrow Biden said private Bitcoin ownership is illegal, if you have your funds on Coinbase, you'll never see your Bitcoin. So if you have it, it's just like if you own gold through a a gold dealer, once you bring that gold home and have it shipped to you, you take away that counterparty risk and confiscation risk, and in Bitcoin's case, hacking risk.
Yeah, each cycle this happens. People lose their money to third parties, and it just makes it an easier layup for us on January 3rd to say, this is proof of keys day. We want to demonstrate holding our own Bitcoin. And it's really hard. I mean, as in the words of Satoshi, one of the challenges with money and modern finance is all the trust involved.
Right.
This is the whole point of Bitcoin. You don't have to trust anybody. I am concerned, though, that it has irrevocably burnt a lot of retail.
Right.
And I am concerned about the path-dependent way forward for government regulation. This is a very easy scapegoat and a very easy opportunity for the government to say, nope, we don't like Bitcoin. So
Right. Well, speaking of January 3rd, the official Proof of Keys Day is what they call it. It's a day in which people tuned into the ethos of Bitcoin pull their funds completely off exchanges and into wallets that they control. To me, this is a great practice, and hopefully those who bought Bitcoin in 2021 and 2022 will take this to heart, and maybe they'll have no choice to take it to heart because, the contagion from this event and from this current bear market has been intense. I don't ever keep my money on exchanges, and I am not a trader. I think a lot of people who got burned are traders, but do you guys think that January 3rd will hit differently for a lot of people this year?
Oh yeah, it'll hit different. I won't have to explain why we do it this time.
Right.
Yeah.
Yeah, and I'm a professional commodity trader, and I will not trade Bitcoin. I buy my Bitcoin and I take it off and I bring it home.
Yeah, well, it's crazy. I have conversations with people all the time. When I consult with them, they're just like, "This is just too complicated. I don't want to do this. I just want to trust a third party." I'm like, "Well, then you don't need to be in this space." I'm sorry, but it's situations like this that is, you learn. You learn the hard way. But prior to FTX blowing up, many thought it was a safe exchange due to its size and exposure. Turns out, looks are deceiving, right? If you have to use an exchange, which do you use and why? Is there anyone isolated from what's going on?
Who knows? The tide is receding, and we're seeing who is caught swimming naked. I perennially do endorse River Financial. I really like Kraken Exchange. There are many good exchanges out there, and typically the best ones let you withdraw your Bitcoin, and they encourage that. And then the best ones also demonstrate some form of proof of reserves, saying we do in fact have X number of Bitcoin and cryptocurrencies. So we can, you can be sure that we have those funds. Again, this is an emergent idea and kind of self-security and self-check system, but I think this is going to be increasingly important going forwards.
And I understand why self-custody is kind of scary because I bought Bitcoin and it took me six years to buy my first hardware wallet and move those funds. So I'm a computer engineer, so I understand why people are scared of trusting themselves for their own security. However, I recommend everyone take those first steps, buy an $80 hardware wallet, spend a Saturday morning trying to understand how the Bitcoin network works. It's actually a religious experience once you really understand the power of owning Bitcoin yourself.
Well, and Russell brought up a good point before we started the show, which was, these people who have their money on the exchanges, what happens to them and their funds? Well, when these bankruptcies happen, it can take years, almost a decade, for some people to get their money back or a portion of it, if any of it at all. So that's why we give these warnings, is because it gets all caught up in this whole procedure. What are you guys' thoughts?
Yeah, I mean, Mt. Gox happened a year ago, and those funds haven't been paid out yet.
What do you mean Mt. Gox happened a year ago?
Or a decade ago, I'm sorry. A decade ago. Look,
Dang, we're getting
it's
beat
been
up.
a long week, okay? And so, yeah, it's these things can take time, and as the value of these assets go up, you might get paid. Yeah, you got paid what your value, what it was worth in 2022,
right? And
now it's 2028, and Bitcoin's $1 million or something.
Right.
So own your own Bitcoin.
That's exactly right. That is the lesson here that we are going to continue to pound, because that is part of the safety. It's part of being responsible. Because if you want monetary sovereignty, if you want freedom, financial freedom, you got to be responsible. You got to educate and you got to learn. And that's why we do this show. And if you got questions, you can always go to my website, mattjmoore.com. You can set up a consultation, and hopefully I don't have to, go through this process where I have to say, hey, you know what? That sucked, that happened, but this is how we do it right this time. We want to get it right the first time.
Yep. MattJMoore.com is the website. That's 2 O's in the word more. And by the way, just for a little context, FTX was valued at approximately $32 billion last week. It's now gone. And the CEO's personal wealth went from 19 to, well, that's pretty much gone too, less than $1 billion in a space of hours. He lost 94% of his wealth. They say it's the quickest downfall of any billionaire ever in history. Ouch. Stick around. More cryptocurrency with Matthew J. Moore after the news on 102.3 KRMG. Welcome back to Cryptocurrency with Matthew J. Moore. We are live and local in the big city of Tulsa, Oklahoma on a Sunday evening, as we are pretty much every darn Sunday, about 5 p.m. Tulsa time. The topic of the day, the collapse of the world's second largest crypto exchange, FTX. November 2nd, things seem to be going okay. November 7th, its CEO says, hey, our assets are fine. November 8th, it crashed by 72%. And by November 11th, he was gone. Bankruptcy was filed. It's a big old mess. And here to try to help sort it out and maybe calm us down a little bit about all this, our host. He is Matthew J. Moore in person. Hey, Matt.
That's right, Russell. A thing to remember is when these things happen, you have to remember there's a major difference between cryptocurrency exchanges, third parties, and Bitcoin itself. Because Bitcoin, the asset, and its network are still fine. The value proposition is still there. So if you've missed the last few segments, we've been chatting with Bitcoin miner Charlie Spears from Nakamoto Partners and chartered financial analyst Andrew Ryan. So we've been discussing, like Russell was saying, why cryptocurrency markets are currently down and what has caused it. If you've been listening to the past segments, then you already know the story. But if you are just now joining us, let me fill you in. Everything is on fire because the world's second largest cryptocurrency exchange, FTX, blew up this week and is now filing for bankruptcy. Yes, another centralized exchange blew up, but like I said, Bitcoin is fine. So, however, the people who, kept their funds on these exchanges or centralized third parties, they're probably not doing so well. Another reason why, again, we're going to continue to pound this message of self-custody, but I'm going to go ahead and we're going to start this segment off with some questions or with a question. But if you've missed this episode, I would highly encourage you. Once we get this posted on podcast, go back, listen to the beginning, listen to all of it, because I think it'll give you more context. But guys, let's talk regulations and implications, because we know that's going to happen. We know people are screaming right now. Many would say that the situation would have never happened if there was proper regulation. And now you have people like Senator Elizabeth Warren and Gary Gensler, the chairman of the SEC, screaming for more control over these exchanges due to the incident. In 2021, Gary petitioned Congress for more powers to regulate exchanges. And Congressman Patrick McHenry from North Carolina released a statement in response to the letter that SEC Chairman Gary Gensler sent. Gensler wrote, I believe that the SEC needs additional authorities to prevent transactions, products, and platforms from falling between the regulatory cracks. We also need more resources to protect investors in this growing and volatile sector. Congressman McHenry said Gensler is going for a quote-unquote power grab over digital asset exchanges and is asking for jurisdiction of all exchanges of digital assets, which his problems with that was they're not all securities and out of his jurisdiction. And to add to the congressman's point, it really is hard to regulate exchanges because even though many of these exchanges are central entities, they are in multiple jurisdictions outside of the USA that can be easily accessed by a VPN. Guys, what are your thoughts on this? Do you think that this whole regulatory conversation around exchanges needs to happen? Where we go from here?
Regulations can't prevent all bad things from happening, but I think the lack of clarity from the SEC has led us to this path. You look at the OG exchanges, Kraken, Coinbase, Gemini, who have for years tried to engage at the federal legislative level for good clarity on how these things work, what cryptocurrencies are, how should they be treated, how can we encourage this business in the United States. But who did regulators actually end up talking to? They kind of snubbed everyone, and recently, as just this summer, only started talking to primarily Sam Bankman-Fried and FTX. So the lack of clarity and the lack of options for American investors to gain exposure to Bitcoin and other cryptocurrencies has actually led to kind of a reflexive effect to engaging in more Ponzi-nomics like these centralized exchanges.
Andrew?
And FTX is not a U.S. company. It's
No.
based in the Bahamas.
Well, their main operation, I think they do have a U.S. arm, but
Yes, they do.
yeah, but that's the only part of FTX that would be under U.S. regulations.
Yeah, and I want to say a parenthetical thing. An exchange can't go bankrupt unless it criminally uses its customer funds to gamble or off the site. I mean,
Right.
if an exchange, I mean, I think those exchanges that Charlie mentioned, Kraken, Coinbase, Gemini, they seem to be they're heavily regulated and well run. As long as they don't play funny games with their user funds, they're going to be around for a long time.
But that's apparently allegedly part of what's going on here, right? Was
Right.
that this Sam guy, this CEO for FTX, had like a back door
Right.
where he could move money between that company and his Alameda company, and he moved like $10 billion. This is the reporting, and there's like a couple billion of that money that's just
Unaccountable.
gone.
Right.
Yeah, I mean, a great point here is that so FTX supposedly had about 1 point something billion of Bitcoin liabilities to users. When the books are opened and Pandora's box, we get to look inside, we see they actually had much fewer Bitcoin. This is an interesting criticism that many of us have had in this space about these centralized exchanges. They have way more Bitcoin liabilities or paper Bitcoin. How do you know if you've got Bitcoin on an exchange that is actually real Bitcoin? And so in the case of FTX, we saw that it certainly wasn't.
Unless they do like a proof of reserves.
Proof of reserves is
Right.
a great option. You prove that we have X amount of liabilities and X amount of reserves. There's 1-to-1. You've got this Bitcoin over here.
Well, and we made the point earlier, but while we were off the air, is that it's actually better that a situation like this has happened in the space than, like, let's say traditional finance, because all the records, if they're accurate, they're all on the blockchain. Everything's recorded and can be eventually viewed by the public. Isn't that correct?
Yeah, and I think my retort to crypto's all scammy is be like, well, I mean, I think a lot of finance is just as scammy or just as disingenuous. The difference is that we come from a transparent industry, whereas that is a quite opaque industry.
Right. You got any thoughts, Andrew?
Well, and I'm just thinking about FTX is a lot like Enron, a lot like Madoff Ponzi scheme. I mean, bad guys do bad things, and they can do them on a huge scale.
Right.
I'm not sure if more regulation would have necessarily,
Prevented all of
this.
it. Yeah.
Yeah, maybe
Well-
not more regulation, but more clarity. That's what we need.
Well, one thing I find fascinating is that Gary Gensler at the SEC has perpetually refused to approve a regulated Bitcoin spot ETF, which many argue could have provided possibly more consumer protection when investing into Bitcoin as far as options go. One of the most stated concerns from Gary, though, from the SEC when looking at Bitcoin spot ETFs is that they are concerned that the crypto spot exchanges are themselves unregulated and prone to manipulation. On the other hand, Gary has approved Bitcoin futures ETFs, and this is because he feels more comfortable with it due to the current market surveillance tools overseeing future markets, which the bulk of the future trading or volume is on the CME exchange, a traditional firm with long-standing surveillance tools in place and firmly in the hands of the government. So, guys, would a spot ETF make any difference in this situation like this, or is this just a moot point?
I don't know if it'd have a huge impact on what happened today, but it's certainly ridiculous that we don't have one.
Other countries have one.
Yeah, other countries have them. Canada's got one. American analogs have these, and we know this works. There have been a lot of more ridiculous ETFs proved, started up in the past few years than Bitcoin.
Right.
It's asinine that we have a Bitcoin futures ETF and not a Bitcoin spot ETF, because a futures contract is just a derivative on the spot. It makes no sense.
Well, and even if there was one, I still wouldn't do that because I like having the actual asset myself and in my own custody. So I don't necessarily want a third party dealing with it. So would you guys be on the same page there? Would you ever buy a spot Bitcoin ETF?
Possibly. It's certainly easier to put your 401k into it than Bitcoin. You can do that with Bitcoin, but I mean, you're not sitting there going, okay, well, I got a couple grand. I'm going to go throw it on Robinhood and figure out what to do. It's very different.
Yeah. 401k is a great reason to do it, but otherwise I would just keep it myself.
Well, interesting stuff. Before, I don't know if you guys know this, but before being nominated as the SEC chairman by the current administration, Gary Gensler was a professor of economics and blockchain at MIT and is the senior advisor to the MIT Media Lab Digital Currency Initiative. He obviously is very familiar with the topic of cryptocurrency, but what's strange is that Sam Bankman-Fried, the founder of FTX, is also a graduate of MIT. Not too concerning there, but his lover, Caroline Ellison, was made the CEO of Sam's Alameda trading firm. And Caroline's father, Glenn Ellison, is the department head of MIT's School of Economics and someone who probably knows Gary personally, considering his tenure. Now, I'm not directly implying anything here. I'm just pointing this out because in a recent interview on CNBC's Squawk Box, Andrew Sorkin spoke to Gary Gensler and pointed out that Sam Bankman-Fried was on his calendar multiple times for meetings and asked him if he was simply hoodwinked by Sam. So hoodwinked or not, Sam had, like we said, a backdoor in FTX books, and billions of dollars of customers' funds went from FTX to their trading firm, Alameda, and with about billions more missing or unaccounted for. So regardless of how this unfolds, guys, how much egg is on a regulator's face, it sounds like Sam and his gang might be in some serious trouble. But with these, I don't know, these relationships, these interactions. Obviously, Sam donated to Republicans as well as Democrats. He was the second largest donor to Democrats. Are there any conflicts of interest here? Are these people, do they know each other? Have they had conversations? Like you brought up earlier, Charlie, was he just hoodwinked? Was Gary hoodwinked?
Gosh, I don't want to say this on air. There's so many crossings and coincidental relationships that derive out of this here. And it's very conspicuous that Gensler and the SEC would not meet with well-meaning actors for years, and all of a sudden SBF's all over his meeting page. I don't know. It's just, it looks so bad. And I think it's really unfortunate because the broader public is going to label this as an issue with cryptocurrency.
Which I don't like.
Yeah.
But you're not going to be able to stop the perception.
No.
I mean, the perception is going to be what it is. But we talked a little bit last week, and I mentioned it during the break. There's value and there's price. There's two different things. And price is often affected by perception. Value is not. And as you guys have been making the point, the underlying system here, Bitcoin itself, actually had played a very small role in all of this, right? And is still stable and still working. Right. And while the market's taking it on the nose because of the bad news, that's what markets do.
Right.
Yeah.
Well, Charlie,
every market overreacts to bad news, right?
Yeah. You posted a graphic. Bitcoin 3% or performance-wise compared to all the other assets this year?
Oh, yeah. Compared to like a lot of major tech stocks, it's still beat out like Snap, Meta, a lot of other stuff.
Was that before like Thursday?
This was a week ago.
Okay, so we'll update that.
A fluid situation.
We'll get back to you. Hey, you're listening to Cryptocurrency with Matthew J. Moore on KRMG. We're live and local in Tulsa. Quick time out. Be right back. Stay with us. Welcome back to Cryptocurrency with Matthew J. Moore. I'm Russell Mills. Been a fascinating conversation this evening. If you're just joining us, the complete collapse of the world's second largest cryptocurrency exchange has been making headlines literally around the world, and we've been talking about it. The company is called FTX. You can just be Googling that as this guy starts to explain to you what's really going on. His name is Matthew J. Moore. Hey, Matt.
That's right. This whole story is a giant fruit, and we've been squeezing a lot of juice out of it. And if you've missed it, you've missed this show, I got to say, go back and listen to the podcast version of this. Go to KRMG's website, krmg.com, or Google Podcasts, Spotify. We're all over the place. But I highly encourage you. We covered a lot, and I'm sure this isn't going to be the only episode we end up talking about this story. But guys, I'm with Charlie Spears. He is a Bitcoin miner, and he's the founder of Nakamoto Partners. And I've also got chartered financial analyst Andrew Ryan in studio. Guys, thanks so much for joining me today. It's been really interesting chatting about this FTX exchange story and its possible implications. But do we look out for more curveballs here? What are you guys watching closely after all this unfolding? Because, I mean, it just seems like the story just keeps coming.
I have hard time imagining that there isn't going to be continued contagion. So the tide has gone out. And we're seeing that a lot of people are probably swimming naked.
Right.
So I won't name specific exchanges, But I will say you can look at what I like and look at on Twitter, and you can look at on-chain transactions, and you can see who is trying to tread water.
Well, and I want to state the obvious that Bitcoin is volatile, and it does surprise on the downside, and it surprises on the upside. And it's just really easy to get in a rut and think it's going to continue doing what it does, and then in one day it switches sentiment. So you just don't know.
Well, and what's cool is Bitcoin is anti-fragile. And what that means is the more it's tested, the better, right? Charlie, you got any thoughts on that?
Yeah. In a world which is increasingly chaotic, the asset which thrives on chaos and creates order out of chaos, which is Bitcoin. Is the asset to own. A year ago today, or a year ago this week, was the local top for this past cycle of Bitcoin, and everybody and their dog was telling me, "Gosh, I wish I bought it when it was in its teens."
Now
And
they
so
ain't gonna
here
be
we
buying.
are. I heard this in 17 and 14. I mean, this is a tale as old as time.
Right. Well, we're buying. I'm buying.
Yeah.
So this is a great buying opportunity if you actually are crazy like us and believe in this space. Because if you stay long enough, a lot of people come for the gains, but they end up staying for the technology if they really do their homework. They really see the writing on the wall. But guys, where do people get plugged in to the Tulsa Bitcoin meetup? Because here's what's important. Community is important. I want people who are interested in this space, who are listening to the show, to come to the meetups, learn, get plugged in, because relationships is where it's at. So fill us in on that.
So I've almost completely forgotten about it, but the Bitcoin meetup this week is on the 15th, Tuesday, 7 p.m. at Welltown as usual. 15th Tuesday at Welltown as usual. I mean, why do we do this in person? Because the internet's a very confusing place. The news is often misaligned with the incentives of Bitcoin and healthy education for the people. So in this case, a lot of how we learn about Bitcoin, how it works, is in person. That first time you take Bitcoin off an exchange, it's a terrifying, confusing thing. Right. And we want to encourage that, and it helps if someone holds your hand.
Yeah, and I think we all think that Bitcoin is an absolutely world-changing technology and comparable to the major technological steps that mankind has made, in my personal opinion. So we're still bullish and excited.
Well, where can they follow you guys?
I recommend Twitter at CB Spears, and then Nakamoto has a newsletter, nakamoto.io.
I'm mostly on Facebook. The Bitcoin meetup group is called the Tulsa Bitcoin Meetup.
And they got to be approved by you, right, Andrew?
Charlie or I, yes.
Okay.
Yeah, I mean, look, this is a world where everybody and their dog trying to scam you. So
right.
what the three of us do is say, okay, we're kind of a sounding wall to make sure that there's fewer of those people.
Well, finish this sentence for me, guys. Those who can make it through this current bear market will
ascend to Valhalla. I don't know.
Wow, we went full Viking. Wow, okay.
Andrew, those who can make it through this current bear market will
have great stories to tell their grandchildren.
Yes. So. I remember back in the days when I bought Bitcoin at 15,000.
I already feel like I'm 100 years old, though. It's been a long year of a week.
All right, well, finish this next one for me. Bitcoin is inevitable because.
Oh gosh,
Loaded
it's a self-referential thing. It's inevitable because I can't imagine a world without it.
I'd say Bitcoin is money perfected, and it can't be killed. It's unstoppable. So those two things make it.
It's money
amazing.
You can't screw with.
Right. Well, that's a good indicator that you as a listener, if you're listening to this and you're new to this space, and maybe you're thinking about buying, maybe you're thinking about getting into it, stay curious, do your homework, learn, because when you put the work in, that's where the rewards come in. And guess what? The next bull market cycle, when people are making hundreds of thousands or millions of dollars, guess what? They were buying right now. Now, that's not financial advice. I'm not giving financial advice. I'm just saying that worked for me when I was buying at the bottom of the bear market last cycle around, 3,000. But then also I bought at $800. So, when it's going up and down, that's when opportunity comes. So guys.
Yeah, it's just I don't even try to time it. I said going into this cycle in 2020, I was like, I'm not going to try to play this. When the DCA hits, the DCA hits. I removed myself from any control over how much Bitcoin or when I buy Bitcoin, it's just gonna, I set it and forget it. Right. And that has helped me so much and made me so much more happier rather than me trying to think and predict all this insanity.
Right.
DCA, by the way, is dollar cost averaging for those of you wondering. And that's basically, I'm going to throw X amount at it on X schedule without thinking whether the market's up, down, whatever. Go ahead, Andrew.
Well, and the great thing is if the price is up, you'll buy a little less. And if the price is down, you'll buy more of it. So it's a great strategy.
Well, boys, it was a great show, and probably won't be the last one on this FTX story. Again, my website, mattjmoore.com. That's more with 2 O's. I want to thank you for listening and tuning in, and hopefully we have calmed your nerves.
And don't forget, as Matt mentioned earlier, if you've missed an episode or would like to go back and listen to the first part of this one, because it was just that good, and it actually was, go ahead and check it out. You can find that podcast just about anywhere, but for sure on krmg.com and on the KRMG app in the on-demand section. You've been listening to Cryptocurrency with Matthew J. Moore. We're live and local in Tulsa, Oklahoma on Sundays at 5 p.m. Tulsa time. I'm Russell Mills, and we'll see you right here next week.